Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, August 10th, 4:50 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we are in an uptrend that got a little bit stronger today. You see the trend gauge over here. We've been pretty consistent on this lately, and surprises tend to happen in the direction of the trend, and this is what we saw today. So we've got market leaders looking good in bullish slash uptrend. We have the 5 major indexes versus their short-term 21-day exponential moving average, bullish slash uptrend, versus their medium-term 50-day moving average, bullish slash uptrend. Long-term, we're still beneath the 200-day moving average, but rapidly climbing toward that level. And what happened today? All eyes were on CPI pre-market, inflation numbers across the board, both on month over month and year over year, as well as core and headline, all came in lower than expected. That sparked a big gap up, and the gap held. Just one small blip during the day where we tried to break down. Buyers came in immediately, took it up near highs of the day, and then we just kind of chugged in a tight range into the close, from late morning into the close. Very nice numbers on the day. G6 leading the way, up 3.65%. Very good sign, means that mid and small cap leaders had money flowing into them today. S&P 500 very nicely up 2.1%. Nasdaq 100 up 2.8. Dow up 1.6. Mid caps up 2.5. Russell up 2.95. Global Diversified 60/40 stock bond up 1.35%. Our in-house GROTECTION portfolio came in with a hedge on, didn't need that hedge. We took it off periodically throughout the day, up 1.33%. We added a little bit more exposure, and I'll talk about that momentarily when we get through the tail of the tape and into the charts. But first, let's talk about what we do here at Revere. If you're new, possibly new to what we do here, we are a trend following registered investment advisor. We're a fiduciary, which means your interests come ahead of our interests, and we're a trend follower, not a pie chart, set asset classes or sectors and just tweak them and let it ride and hope you have the stomach to ride out the trends. We actively participate in the markets, either positively or very defensively, depending on what is happening with the market picture on a technical basis. So, for example, last October, when we're trending above all 3 time frames that we track, like I showed on the trend gauge, the green line is the short-term 21-day, the red line is the medium-term 50-day, the black line is the long-term 200-day. When we're trending nicely all above them, we are very invested in the market. When we start going sideways, we take a little bit of a step back. If we start rolling over, we take another step back and get maximally defensive if we get below this long-term moving average. That's the 200-day. That's where we spent the majority of 2022. This was the key area right here, late April, when we tried to get back above it, and we failed miserably. Bounced once, bounced twice. This is the second bounce. Once we get back above, we don't only have rules to get out. This is one of the criticisms of the buy and hold people. They say, well, not only do you have to time getting out, you have to time getting back in. We've got rules for getting back in. We'll get back in on the short term when we get back above the 21-day moving average, our short-term trend line. Add a little bit more when we get back above the 50-day, and continue to add exposure as long as leading stocks are acting well. Always with an eye on this overhanging 200-day moving average. This is when you get below here, when you get down 20%. This is the warning sign that your capital is very much at risk. All big sell-offs in the market, all big bad bear markets, whether they're minus 20, minus 30, minus 40 or more, all initiate under the 200-day moving average. So when we're under there, we will never go all in bullish. We understand that there are some technical indicators in the market that tend to suppress the market at times when you're under here. We'll see what happens should we continue to get back up. As you can see, it's trending lower. The averages of the market are coming up into it. It looks like they want to meet here around 4,300, and we'll see what happens. That 4,300 area is the next resistance area, as that was the highs when we were trying to rally back in late April and the beginning of May, before we had the most recent legs lower. So nice reaction today, and it held. Let's take a look at a 5-minute chart here on the S&P 500. Here we had a 2-day pullback. We gapped up. This was the only attempt at going lower today, was this break below the opening range. But buyers immediately came in, shot it up to 42.10, and then basically we just bounced sideways between 41.93 and 42.10 right into the close, closing at 42.10. So nice consolidation for really the last 3 quarters of the day. Can we use this consolidation as a springboard to go higher? We'll see, but right now this 41.93 will obviously be an area we want to keep an eye on, and we would get concerned if we break below this 41.78 area. So that's how we manage money here at Revere. And if you're interested in learning more about this approach, reach out to me, please. Email is don@revereasset.com. Phone is 855-REAL-WEALTH. That's 855-732-5932. So let's take a look at the tail of the tape and the rest of the indexes. Here's the tail of the tape. A couple changes to this today, but first let's finish getting through the indexes. So you've got the S&P 500. As I mentioned, this consolidation, we tried to break out of it on Monday. Failed, a little bit lower on Tuesday, bounced right at the 8 EMA. That's that thin purple line. That's the ultra short-term trend line. When you're above there, you're really trending bullishly higher, and there are a lot of charts that are doing that, and breaks of that 8 EMA on individual charts will be the first sign that we may be pulling back a little bit. But for now, we've got a gap up, very clear above this consolidation, and also above this consolidation, which was our most recent area of resistance, the high of this consolidation 2 CPI reports ago. Seems like forever ago. But when we pulled back today, we pulled back to 41.78, right to the high of that after the gap up, and that's where we bounced. So that's a situation where what was resistance turned into support, and now any pullback to this 40.78 area, which was a resistance level today, what we were watching coming into, this will shift to a support area for tomorrow. And my expectation will be any pullbacks to this level should bounce at this 41.78 area, or if it undercuts it, should reclaim it. So that's a short primer on support and resistance. But this looks great for now. If you're a bull, if you're a bear, your fur is getting singed, and you better jump in a bucket of water. Nasdaq 100. Very similar, not quite a close. The high of this recent consolidation was 326.47. The high today, 326.23. So we did not quite break out of this recent consolidation on the Nasdaq 100. You can see how tech lagged over the last 3 trading days. Clearly a leader today, but hasn't quite broken above that level. But it is clearly above the similar consolidation that happened from 2 CPI reports ago back in late May, early June. So it's got that going for it, which is nice, as Bill Murray would say in Caddyshack. Dow Jones Industrial Average, very clean breakout above its level, 33,272. We closed at 33,309, so we cleared that resistance level again. The top of this and the top of this area should be support on any pullbacks. Let's go to mid caps. Very clear breakout 469, not quite above the 469 high of that consolidation pre-CPI, but definitely showing some relative strength, and now only 1.7% away from the 200-day moving average. Small caps, IWM, clean breakaway too. So you see this breakout failed on Monday. There was strength in the small caps, pulled back, but right to this ADMA, you can see this is containing this very strong run up over the last 3 weeks. Higher high close. So only the Nasdaq 100 didn't make a higher high close relative to the week, and above this consolidation area also has been for a while, in fact. On the IWM, 2.2% below its 200-day moving average. Let's go back to the S&P 500. We are 2.8% away from the declining 200-day moving average. So there's a summary of the 5 major indexes. Let's go to the tail of the tape. Bull case still certainly firmly in control. VIX dropped 9.3% today, under 20 for the first time in quite a while. I mentioned the news. This initially sparked bonds higher, rates higher, dollar down and the market up. Dollar down and the market up stuck, but rates did not. In fact, the long term, rates were, let's take a look at the TLT, and you'll see what they did. So initially, a big spike up here on TLT, but look how it reversed. Remember, price up, yield down, then it comes down and rates went higher. Let's take a look at IEF. Gap up, remember, price up, rates lower, but we sold off. So rates went up. Basically, the bottom line of what happened is that the yield curve got less inverted. I haven't looked at the full structure of it, but bonds certainly moved around a lot today, while stocks stayed firmly bullish. So let's see, what else do we got here? PPI before the open Thursday morning. CPI tends to be extremely stressed more than PPI is. PPI is the producers, but the CPI data is what actually hits the pocketbook of the consumer. So notes on Tesla. Tesla had a kind of a strange 3-day sell-off, August 5th, 8th, and 9th. Ended up that was Elon selling 7.9 million Tesla shares, worth $6.9 billion apparently for his Twitter war chest. He said if some of the financing doesn't come through, he doesn't want to have to panic if he's forced to buy Twitter, which is what they're wanting to do right now. So expectation coming into today, my only expectation, didn't know if we'd go higher or lower, but volatility was what I expected after CPI. And I mentioned after that one minor fake out, we were mostly bullish. From the emotional front, I wanted to be patient with my SQQQ, which was at a profit. It was pulling back. We ended up closing this for a small loss, 0.5% impact to the overall portfolio. So don't have to worry about the SQQQ profit anymore, but it did serve its purpose while we were pulling back. Don't want to go into a binary event too heavy either to the long side or the downside. In this case, it cost us a little bit, but we've got a decent size book now and beta over a 1. So I mentioned the support and resistance levels. We're into this resistance area, which is the high of the most recent consolidation on the Nasdaq 100. We're basically right there, and we gapped and then worked our way above R1 and R2 today on the S&P 500. So this 4178 will flip to a support level tomorrow on here. What sectors led today? Mostly tech, but also basic materials and solar. Oil started out negative, turned positive. TLT started out positive, meaning rates down. Rates along with the dollar were down, but it flipped and rates went higher by the end of the day, as I guess the market figured out that the Fed's not going to stop raising rates just because inflation appeared to come down a little bit. We need to continue to work on that, and raising rates is about the only way to do it. So TLT flipped from initially higher to lower. Dollar nice move down on the day, and the other thing that was down was gold. On a relative basis, it was the defensive names that were weak today. They finished positive as all 11 S&P sectors were positive, but staples, utilities, and healthcare were the three sectors that were up the least today. Let's take a quick look at UUP, the US dollar, and you can see here the gap down closed at the top of the range, bounced off this 28 level. I'm going to reset. This was a prior resistance area. I'm going to reset an alert there and want to see if it goes below today's low. So we're going to set another one at 27.98 in real time here, folks. And we will keep an eye certainly on what's going on with the dollar, as it has had an absolute inverse correlation to what's going on with the market. So what we do in-house today, I mentioned in we did three different sales of SQQQ to get out of that, and we bought a 2% position in LNG. Nobody's talking about oil. This is by far the nicest oil chart. Nice tight pattern, lengthy, going all the way back to April. So and a nice depth to it of 20%. This did not correct anywhere near as much as the overall oil stocks corrected. And one thing that you'll notice is they are continuing their projected EPS gains. 1061 this year, 1586 next year. Very few oil names are projecting to have increased earnings in 2023. LNG is one of them. Came up to the top of this flat base, put in a little bit of a handle here. Now some volume came in over the last couple of days. Hat tip to Michael, our new associate portfolio manager and analyst, for bringing this one to my attention. He did a nice deep dive into their business too, and was very bullish on the fundamentals as well as the technicals. And when those two come together, and it's a chance to diversify into something that has leadership potential, we took it today, buying a 2% position in LNG, and we'll double that if our pyramid level is hit. So those were the two portfolio changes today, but that had a big effect on the portfolio, selling the SQQQ 10% position and adding LNG, taking our adjusted beta from 0.75 to 1.23. So we're 23. Effectively, it's not perfect because stocks aren't perfect. Only the indexes are perfect from a measurement standpoint, but 23% more beta than the S&P 500. And if we continue to go higher, we should outperform the indexes. If we pull back, we should lag slightly, but we'll show our individual positions in a bit. They acted very well today with the exception of one. Bottom line for everybody, CPI sparks big rally to 3-month highs. I'll bring up the support and resistance levels here, and you can see the declining 150-day and 200-day are overhead, coming right into the 150-day, putting some distance between ourselves and the 100-day, and also this 4200 COVID fib. So these last two levels here, that COVID rally was the last major fib. We got above it today, and as well as the top of the range. I got to update the comments on this, but you get the picture. CPI sparks big rally to 3-month highs. So let's take a look at what we own in-house today and how it went. We own 11 individual positions right now. The biggest by market cap are Apple. Apple almost coming up to the top of this base, which would be all-time highs. It clearly has been a relative strength and a price leader, coming off this bottom, going from 130 up to 170. Relative strength at a new high. That's something that we love to see. Next up on market, from a market cap perspective, is Amazon. Coming into the 200-day moving average, up 3.5% on the day today. Rest of our holdings, ON Semiconductor bounced off the 21 yesterday, up 5% today. The other semiconductor stock that we own, MPWR, up 4% today, bouncing off the 8 EMA. Then on to Net, which we just bought yesterday, showing a profit there as it's making new recovery highs. This is what you want to see with a gap up with big volume, a little bit of consolidation and then a follow through to the upside. That's what we got off Net today, up 10%. Silvergate, we've held this for a while. Crypto acting well, Silvergate acting well, riding the 8 EMA higher. That's what we'll be using as a stop on this. LNTH, medical devices, medical products, making new closing high, all-time high, continues to be a leader. Enphase, a solar stock, really the solar leader, up 4% today, lagged at the beginning of the day, but notice how this is riding the ADMA higher too. That's what we want to see. T-Mobile, this was the one fly in the ointment today, trending higher above the ADMA, but a negative reversal as money shifted into more growthy type names today. Shockwave, we bought this yesterday, continued a nice day two higher high, up 7% to the upside. And then we added LNG, 1, 2, 3, 4, 5, 6, 7, 8, 9. Those are our 9 positions, 11 positions, including Apple and Amazon. And then, of course, we own a 20% size in SSO, 2 times the S&P 500, and still owning our VTIP, which is basically the equivalent of a money market with a nicer yield. And let me take a look at a couple of more charts, some things that got our attention today. The trade desk TTD up 36% on huge volume, certainly has my attention on any pullback into the 200-day moving average. Very extended now, lovely chart. Plug in that clean energy field reported earnings yesterday, up 17% on 140% above average volume. Take a look at this ETF. I talked about it earlier. ICLN, Clean Energy ETF, clearing this nice double bottom today. Very clearly a benefit from the quote-unquote Inflation Reduction Act. Also Array, another solar stock, up 30% today on 209% volume. This thing got above 20 and just kept chugging higher. Great numbers, great technicals, great fundamentals. When they get married together, it usually makes for great returns. And when the market is also participating, 2 more double-digit gainers today. KRTX, day 3 higher high after its gap up on its earnings report. This is a biotech stock. Not really much from an earnings standpoint. I think there was a phase 3 or something announcement tied to this. I got to research that a little bit more. DOCN, a former growth stock darling with a gap up to a higher high after its earnings report, still below the 200-day moving average, but this is what bottoming bases look like, and now we're breaking out from quite a few of them. And Sentinel One, we're looking for a new leader in the software security sector. Some very nice moves up today. Also CrowdStrike had a nice move today, back above the 200-day moving average. And QLYS on earnings a couple days ago followed through to the upside, day 2 higher high coming into the top of its base, relative strength at a new high, and that's going to wrap it today. As always, love to hear from you. Email me, don@revereasset.com. Phone is 855-REAL-WEALTH. So wrapping up, CPI, happy day, green across the board. If your stock didn't participate and the chart is not looking well, ask yourself why you're owning it. All 11 sectors were up today. So wrapping up, Wednesday, August 10th, this is Don Vandenbord with Just the Facts. Thanks for listening and have a great evening.